Hello, traders. I'm back to work, so I'm having to do a little catch up on the weekends, some of the intraday price action and stuff. And my trading's pretty well done for the season. I've actually made more than my wages for the year, so I'm pretty happy just trading the first part of the year. So, any rate, when I can stop in and give videos, I'm going to do that, but it's going to start getting very busy for me. So, it's going to be hard for me to put these out. So, I'll see what I can do today and just give you a broad idea of what I'm seeing in these markets and stuff. And basically, by looking at my charts here, this is what I was calling out as a very critical. This is the 2018 volume point of control. That's where the most volume to do business in 2018 hit. Okay. And it acts as a resistance zone. Well, we've started breaking out above that. So, yeah, everything's A OK, right? Well, no, not necessarily. Typically, when you get to the top of a month, this is the monthly value area high. This is a responsive sell zone when you get up into the red zone on the monthly value area. Okay. This is where you should actually take profits on your positions, and you should possibly initiate shorts. Not necessarily, but possibly. Okay. So that just gives you a little bit based on volume profile theory. The way these are all built out and how they're so elongated, it's really difficult to figure out how the price action is going to go. But that's something that I did want to point out. We are poking out above the primary downtrend, poking above ahead, going ahead of critical financial starting Tuesday. We have all these banks reporting earnings this week. So we have a earnings extravaganza of critical earnings hitting the tape starting Tuesday. And all of this move up here has just been hope and a prayer that the virus thing is all over with and everything in the economy is going to be a-okay with, since all the stimulus and um, you know, you got central banks around the planet just pouring trillions of liquidity into the markets to stabilize the markets and to make things look all so much better. It's Keynesian economics at its worst. Okay, so what can I say? You know, eh, uh, with central banks manipulating the markets, it's hard to bet against the markets. Okay, but I just want to give you some takeaways here, just what I'm seeing on the charts. We're going up here, responsive sell zone from this one view. Now, from a secondary view, that's XOP. Wait 1 second here. I gotta find where's it at? There. Nope, that's Q. Spy. A second ago. Okay, see this downward. Okay, see the double, these triple bottoms down here. So basically, we got a trend or a channel situation. And the reason I put the top right here, this turn has acted as a bullish area, which has been rejected, and this is a bearish area that's been found responsive buying on this trend line. So that's why I have my trend line there. And we came right up to that Thursday, found responsive selling as of Thursday. So something I do think this is a valid downward trend line. This also validates that we might be at a top in the SPY based on the downward trend, and we could start seeing responsive selling in the markets. So despite the fact we poked up the above my yearly VPOC, which that is typically an oscillating line. That's not a dead line in the sand, but it is a very delineation between bull and bear in the markets. Um, and we're finding a potential resistance area here. It's going to be really tough for the. I would not personally want to be initiating longs at this position, in my opinion. I'd want us to be coming back down at least midways before, or coming down to these range lows 25.56, going into these horrible earnings that are going to be hitting the tape this quarter. So just something to keep on watch going forward here. Okay. Okay. Okay, on our Qs here, our NQs, basically we're still below our monthly volume point of control. So this is a little bit more bearish on our Qs. And we're below our midline of the primary trend uptrend on our Qs. So that's a little bit more in the bearish camp. Um, the Qs have been leading on the way up, but as of the past couple of days, they've started to lag the markets. We're starting to see rotation into the Russell, and the Russell now seems to be running the markets. As you can see on the Qs right here, this area right here has earmarked the breakdown point, potential breakdown point. So basically, we're coming up here, finding resistance up here at this consolidation zone, and we got to see what's going to happen here. We could see some potential selling in these markets because we're finding resistance right at the bottom. It's not like we crossed over the bottom and started popping up. We are finding a lot more resistance, just barely getting into that resistance zone. So something to keep on watch going forward in your trading. Now, some things I'm also looking internally here on the Qs. SMH, that's your semiconductors. That is your primary driving force for your Qs. And basically we saw rejection there Thursday, and that took us right back down to the neckline, the primary neckline. So basically, I want to really keep a close eye on this because a continuation higher, you're going to completely negate any head and shoulders potential out of the Qs. So something I definitely want to keep on watch going forward here. But see how price did reject right there. So I want to watch Monday morning, see if we see responsive selling coming into the tape. But basically, this is setting up right here and right now. This is the most bullish, one of the most bullish areas in the markets, unless proven otherwise. So I do want to keep an eye on that. It does look like rotation is coming out of the SPY and the Qs Thursday and the past couple days, and they've been moving over into the Russell. So we'll see what happens here going forward and see if that rotation can continue. Okay, another one that I wanted to talk about, that's your FDN, that's your Dow Jones uh, Internet Index. Okay, and we do have a shooting star candle right at critical resistance on our internet Dow Jones Internet ETF. That includes some of your Apples, Microsofts, and a lot of the tech names. They're all wrapped up inside this FDN ETF, and we have found, like I said, a potential uh, shooting star uh, reversing topping formation, and this is clearly defined that does support that there might be even more further weakness in the tech on the Qs going into the first of the week, in my opinion. The Russell is still lagging the markets. It did finally got a really nice short squeeze there Friday by breaking out this downward trend where the other two indexes had already broke out. So it's still lagging relatively. We just saw rotation into the tech or into Russell. It was the last one to get some rotation into, and we saw that Friday. Okay, so something to keep that in mind going forward in your trading. I don't really think the IWM is quite done yet. Basically, this is our back test, the 126.05. So I'm thinking we're going to have a gap up Monday, tagging this. We might see a little bit overshoot or something, but I think we're going to get a little bit in our Russell come Monday morning. So something to keep in mind here. I don't think we're quite done with that yet, but that is the breakdown back test for the Russell, and that has acted as resistance in the past. We just haven't quite got there yet. So we are in an area. This is a responsive profit taking zone for the Russell. That may not be it for the move up, but that's just something to keep in mind going forward in your trading. Three main components I look for in the Russell. That's your regional banks, your biotechs, and your energy. Those are the three main sectors that support your mid cap or your small caps. So something to keep in mind here. So I'm going to start with CRE. This also supports my thesis that basically we had this breakdown. We broke down below what used to be critical support, and as of Friday, we are back testing this breakdown. and this is a very critical breakdown scenario. And so basically, we're basically coming up from like here, and we're seeing if we can save this trend uh, on our KRE, our regional banks. It's very important. I do think there's a little bit more gas in the fuel tank for the IWM, but we are at critical support resistance going into all these bank numbers this week. And regional banks are definitely going to be under fire. Uh, Basically, zero interest rate policies are horrible for regional banks. Absolutely horrible. And one of the regional banks is reporting this week. Cannot remember what name it was. I had it written down. Yeah, can't find it. I have to find it. It's like Thursday this week, I believe, one of the regional banks, one of the key regional banks, HBAN, I think. So, okay, the next area I want to talk about why I think there's a little bit more fuel in the fuel tank. Basically, we crossed a little bit above resistance there Friday, and I do think there's going to be a little continuation back testing this gap, but that's also a dual um, resistance area. So despite the fact that we're going past the horizontal resistance or the horizontal resistance, the the true resistance, in my opinion, is actually further up here. Uh, a lot of people get um, they think they've broken above those horizontal levels and they think they're in the clear. But I think the true resistance is up here, back testing this gap on XLF, which I think we're going to be doing that Monday. So something to keep in mind in your trading. Your XLE, of course, very easily can fill this gap. Any type of positive news in the oil space whatsoever. Uh, this can trade that can fill that gap so darn easy. It's ridiculous. So basically, we're trading inside of this range. Um, it was probably still a buy by the close on XLE. It was probably still the case going into the, Monday, in my opinion. So we'll see what happens. But it does look like this is the area now that crude is wanting to, or the XLE is wanting to trade in. It's wanting to trade higher, more likely to trade higher than lower, in my opinion. XOP is another one that's really critical. I definitely think this one's going to fill this gap this week, probably Monday. The gap is just way too low. This looks like a capitulation dump of XOP. Just keep that in mind going forward. This one here, high odds, filled this gap this week. And then the final area in the Russell that I want to talk about here, I think we're already at a responsive topping area for the IBB. So keep that in mind going forward here with all the coronavirus stuff and all the government. They got a whole package of stimulus going into healthcare and healthcare. But that's something to keep in mind here. We are crossing into what typically would be a responsive max greed area. See, we've had responsive selling here before, responsive selling here before, responsive selling here before. So something to keep in mind. Basically, once we've poked up, we've come up to this level and then sold back off. Once we pumped up, come up to this level, sold off. Now we pumped up here again. Now we're coming up to this level. This is the zone. Historically, we've seen responsive selling and then reset for the next leg back to the highs. That's the pattern that seems to be playing out here on our biotechs. Okay, I want to start with the VIX. You see back here in 2008, and I do think this is a much more severe situation than what we had back then. Let me remove this real quick, make it easier to see. There you go. And basically, once we've come back, when we come back down, right here, this level is the area we held back in 2008 on that correction. And that's where we are right here, right now on our VIX. So something to keep in mind here. I think we might be near a bottom for the VIX if sellers do start coming back in here. So just keep that in mind. This is a responsive buy zone for our volatility going into the first of the week. So something, if we were repeating 2008, which it seems to me that there's significant enough damage, this seems far worse than what happened in 2008, in my opinion. So we'll see what happens. But I did want to point that out. And then also, if you go out here on your time frames, are excuse me. I'm sorry. Excuse me. I wanted to point out here our VX here. It hasn't opened up as of Friday. We went down 1.175. Okay. And what I'd like to look at is the rate of change. So if I go out, where's the next one? 31. I want to go out about 60 days. Well, shoot, these have reset now. Well, at any rate, what I was seeing before, they've reset my numbers now. I can show you on a different chart here. Wait 1 second. There you go. I've already charted it for you. They've already updated my numbers, so I can't really do it to you. I did my chart earlier, so now I can show you what's going on here. Basically, the back end of the curve crapped or completely crashed versus the front end of the curve. So basically, buyers and seller they started capitulating the long end of the curve on the VX futures going into the weekend. So I did want to point that out. That is a major, it looks like it was doing a catch up because the front end of the curve is still the green is the front end of the curve, and the purple is the back end of the curve. So they're still got a relative bid, higher bid for the back end. So we are in backwardation still. So just keep that in mind. So they're still buying, they're still keeping protection on for the back end of the curve, but the front end, as of Friday, or as of Thursday, they were bringing in the back end a lot faster than they were the front end. So we'll see what happens going forward here. This is something to note going forward. It may or may not mean something. So. Another one I wanted to talk about was the VXN. That's the VIX for the NASDAQ because it was showing relative weakness the past couple of days. Basically, we've come crashing down to this level on the VXN, and look what's happened in the past. 2008, here's where they actually started maintaining price on volatility at this price point. So something to really keep in mind here that the short squeeze might be over with here based on, and we have back in 2000 2001, this is the area that acted as support for the VXN. Volatility actually tends to spike from this point, historically. If this scenario which has been going on in the markets does continue, what happened back there is a lot different than what happens now because now we have central banks completely and totally getting into the markets. So, it's hard telling what's going to happen. But I did want to point out on a chart basis, everything being equal, this is the area where shorts should come back into the market. But of course, everything isn't equal. Okay. The RVX is I wanted to keep on watch here, and that's another reason why I think there's still a little bit more room in the IWM to the upside. I don't think the RVX. This is the volatility for the Russell. I don't think it has quite come back in all the way yet for the supporting area like back in 2008. It's still they still have a heightened bid in the RVX. So that if that's the case, if that's coming in, the most likely scenario, we're probably going to get a continued bid in the energies patch, in my opinion, next week. And like a XOP will fill that gap, helping to alleviate some of this pressure. Okay. Another one I want to keep a close eye on here. The high yield bonds came up and they back tested the breakdown line as of Friday for the high yield bonds. Okay, so basically we've had this massive sell off and now we've had this massive retrace. So basically we've come all the way back to the 25.6%. And in a bear, if the bear market's rules apply, this should represent a high point for the um, high yield bonds. If the high yield bonds were to mark higher prices from here, then I would have to throw in the towel for a bearish scenario in the markets in the near term, in my opinion. But yeah, we should start seeing responsive selling from this point in the high yield bond, in my opinion. But considering all the central bank manipulation, it's hard telling what's going to happen. Okay, one thing we just have to keep in mind, and hopefully the Fed doesn't lose control here. Basically, we are unprecedented levels for the U.S. Treasuries, 10-year Treasuries. You can't really get any higher prices than what we currently have. We're already 0% interest rates, and so it's if and when the Fed loses control of this market, you know, and the markets were to start to sell off, the very good chance the bonds are going to go in tandem at this point. Typically, bonds are supposed to be the safe haven while the stock market goes down, but because the Fed has manipulated the market so bad, and if for any reason the Fed loses control, both the bonds and the stock market collapse in that scenario. So it's a very dangerous situation considering this is supposed to be the area where traders run and hide in a recession. And because of central bank manipulation, they can't really do that anymore. So basically, the only safe havens right now are silver and maybe some of the other precious metals. And you can't even go in gold right now because of all the central bank manipulation. All these sovereign countries, they're cashing out their gold just to run their countries right now. So keep that in mind. Gold's very high volatility in gold right now as well. So, you know, uh, very difficult situation going forward. So basically, right here, right now, should the markets should be a sell, but because of all of the central bank manipulation, I can't say that. So what can I say? Uh, at any rate, that's just pretty much my thesis on the markets, and we'll see what happens. And good luck trading this week. Please like the video if you like it, and leave some comments below and stuff. I appreciate all the feedback you can give me. Okay, thanks a lot.